What's interesting, we'll see it later in one of the charts, actually the seed and the late stage funding rounds are doing quite well compared to historically. It's the Series A's and B rounds that in Q2 we didn't see a lot of and large rounds of compared to historics. That led to only a 0.4% VC market share, which is about 2 times higher than Contech had been a couple of years ago. But it is a drop compared to where we were the last 3 quarters, about 50% drop actually. In terms of Contech density and Contech market share, Asia Pacific continues to be the most important Construtech hub in terms of that market share, followed by Europe. In the US, actually, Construtech has a relatively low share of VC. And overall, however, what's interesting is this 500 million funding raise was not very deeply concentrated in 1 or 2 companies. There was actually a number of deals that contributed to this. The top 4 deals only made up 30%, so about 130 of the 500 million. And the top 10 deals were about 56%, so about 260 million of the 500, which is a good concentration ratio. It's an important measure I look at because it shows me, hey, is this a maturing or mature sector, or is it a sector that is actually relying on 1, 2, 3 marquee type of deals? We're way past that problem. So construction tech is mature, and for the last 16 quarters or so, the concentration ratios have been giving us the signal of a mature tech sector.
Seed and late stage strong. So seed, how to interpret that means that seed, that there's lots of new startups coming out, and there is people want to invest, I guess, in seed. What about the late stage? Because
I think,
what does it
Martin,
mean
just to add to your point as well, what's interesting is there's companies being funded at seed, but are they not? Does this signify that companies are not able to achieve the metrics to get to Series A? Are we starting to see that?
That's a very good question. If you could hop to page 13, there we have the charts for this actually.
13.
And I'll try to give you my interpretation because in the end, I don't have an absolute answer to this. So on the left-hand side, you see early stage. Early stage is seed and Series A, B. And then on the right-hand side, you have growth stage. Let's start with the right-hand side, Martin, Owen, before we come to yours. So interestingly, the growth stage of construction tech continues to grow higher and higher and higher. That's the purple chart, the purple bars on the right-hand side here. Whereas for overall venture, it's actually becoming slower and slower and slower over time, right? So that's sort of a very interesting observation that the sector is maturing. You will always have in a let's say sector that isn't doing 10 billion a quarter, you will always have a little bit of spikes, but you see the trend, right? So let's come to, and I think that is an amazing signal. Let's come to the left-hand side, the early stage. So you see here the purple and the pink. So purple is the Construtech or AEC Tech seed stage, and pink is the Construtech Series A, B. So you see how the Series A, Bs actually recently were trending closer to where we were 10 years ago, while seed holds strong at 250 to 300% of 10 years ago, right? Why is that? So seed rounds are cheaper, more capital is available. We tend to say in fundamental, and it's not, I think other people will say the same thing, is seed is the most liquid stage of venture. And you will always find someone that will give you some money if you have the right pitch and the right team. And that's why you see stability there, right? So you see that Construtech is a category that can draw founders as well as capital at seed. Now, then why is the funding gap widening towards Series A's and B's? My personal, a little bit cheeky response, and I know you guys want me to be cheeky because apparently it draws in one additional viewer. So let's give them that viewership.
Let's go.
Well, if you build shit companies and you raise your seed round on a shit promise and you can't deliver on that shit promise, well, at Series A and B, it's easier to be made, right? And so there are A's and B's that still get raised on narrative, etc., all the time. But overall, if you look at the big statistics, you actually become legible by that point. That's the term we use internally, right? So someone, the words become less blurry and they become sharp, and all of a sudden you can read what's in the book. So you become more legible to the overall investment community. And then that, to me, is the only explanation, is that when companies become legible at that stage, they don't look attractive.
Mhm.
And then the reverse engineering to me is that probably means they shouldn't have received seed funding.
Mhm. I'm very
I
curious
don't know. What do
to
you guys think?
I'm very curious if the other industries have similar tendency of this graph, this chart, or it's more kind of continuously going up rather than serious. There is a peak
You can
in
see
the
it here.
growth, like you said, it's cheap to invest.
Yeah, you
in
can see it
company.
here, Martin. So that's the two red
all
bars,
venture.
right? So I'm comparing it. I'm comparing it with all ventures. So the light red is actually all venture seed, and the dark red is all venture series A and B. So there is a natural. No, actually, it's not natural. There is a gap between the two, which means that seed overall is higher compared to 10 years ago, but series A and B is a little bit less higher compared to 10 years ago. So there is a similar disconnect. However, you can see how the scissor has been going up last quarter between Construtech Series A and B and all venture Series A and B. So that's
Yeah.
an interesting observation that you're pointing out.